Hello there. If you want to know how much life insurance do you need, I will tell you right now. Most financial advisors' rule of thumb on this is 10 times a person's annual income. This is the easy way, and I would say a good starting point to calculate your insurance needs. Let's say you are making $60,000 a year. A good insurance policy amount should be around $600,000. That would mean your family will be provided your income in the next 10 years if you happen to die today, which means you don't have to worry that your family will starve, that they will be homeless, and that they may not enjoy the life they have because you are no longer around. Another way most financial advisors calculate your insurance needs is by knowing how much you spend. This will be the least amount of insurance. It will be enough to ensure that household expenses will be covered in the next 10 years in the event the main breadwinner passes away. This provides enough time for the surviving spouse to adapt to the life without the other spouse's income. In this case, we add all annual expenses, which may include mortgage or rent, car payments, budget for food and utility bills, emergency and other expenses. When we then multiply the annual household expense by the number of years the person wants to protect its income. In this example, we are looking at the household expense total amount of $50,000. So if the person wants to protect its income for 10 years, he or she must get a policy coverage amount of $500,000 and must get a $1 million policy for a 20-year protection. Age also should play a role in making a decision whether to get a 10, 15, or 20 years policy term or a permanent policy. In this last option, the applicant for an insurance may consider to have the policy cover the full amount the family will need when the insured dies, meaning the applicant for insurance may take into consideration paying off the mortgage and car payments, have enough funds for other future needs like college education, and for everything else in between. That is totally securing the family's financial stability in the event of the passing of the insured spouse. This is the way to have 100% protection and total peace of mind. So we have discussed the 3 common ways to calculate your insurance needs. However, your financial advisor may suggest other ways based on your financial goals and on your current financial situation, and it should be okay. Insurance is not a one-size-fits-all plan, and a good financial services advisor should be able to consider your unique situation in calculating your insurance needs. Just keep in mind that understanding your needs, knowing the importance of having enough coverage, and understanding your financial situation must be your basis of what amount of insurance you'll need to protect your family. And if you think you need help, don't hesitate to reach out to me or to any trusted financial advisor for further assistance. Again, I hope you learned something from this video. I invite you to check out my other videos as I talk more on other topics about life insurance that you may be interested in. If you learned one thing on this video, please click like, subscribe, and comment below, or visit my website to ask questions privately.